Real estate investing can be a great way to build wealth and generate passive income. However, it's important to understand the basics before diving in. One of the biggest advantages of real estate investing is the potential for high returns. Properties can appreciate in value over time, and rental income can provide a steady stream of cash flow. Additionally, real estate can be a hedge against inflation, as property values tend to rise with the cost of living. However, real estate investing also comes with its own set of risks. The value of a property can decrease, and vacancies in rental properties can lead to lost income. It's also important to consider the cost of repairs and maintenance, as well as the cost of property taxes and insurance. Before investing in real estate, it's important to do your research and understand the local market. Look for properties that are in good condition and in desirable locations. Consider the potential for appreciation and rental income, and compare the costs and benefits of different types of properties, such as single-family homes, multi-unit buildings, and commercial properties. It's also important to have a solid financial plan in place. Make sure you have enough money for a down payment, closing costs, and any necessary repairs or renovations. Consider the potential for cash flow and the overall return on investment. One strategy for real estate investing is to buy a property and hold it for the long term, collecting rent and waiting for the value to appreciate. Another strategy is to flip properties, buying them at a lower price and quickly reselling them for a profit. One of the most popular ways to invest in real estate is through real estate investment trusts, REITs. REITs allow investors to buy shares in a trust that owns and manages a portfolio of properties. This can be a good way to get exposure to the real estate market without the hassle of owning and managing property directly. Real estate investing is not without risks, but with proper research and a solid financial plan, it can be a great way to build wealth and generate passive income. Another aspect to consider when investing in real estate is the type of financing you will use. There are several options, such as traditional mortgages, adjustable rate mortgages, and government-backed loans. Each has its own set of pros and cons, so it's important to understand the terms and conditions before committing to a loan. Another important factor to consider is the type of property you want to invest in. Residential properties, such as single-family homes and apartments, are the most common type of real estate investment. However, commercial properties, such as office buildings and retail spaces, can also be a great investment opportunity. These types of properties typically have higher rental rates and longer lease terms, which can provide a steady stream of income. Real estate investing also requires a good understanding of the legal and tax implications. It's important to understand the laws and regulations surrounding property ownership, rental properties, and real estate transactions. You should also be aware of the tax benefits and deductions available to real estate investors, such as depreciation and deductions for mortgage interest. One strategy for real estate investing is to invest in a vacation rental property. This type of property can generate income by renting it out to tourists on a short-term basis. The location of the property is critical as you want to invest in a property that is situated in an area that is a tourist destination. Another strategy is to invest in a property with the intention of renting it out on a long-term basis. This can provide a steady stream of rental income and can be a great way to build wealth over time. It is important to have a good understanding of the local rental market and the types of properties that are in demand. In conclusion, real estate investing can be a great way to build wealth and generate passive income. However, it's important to understand the basics, do your research, and have a solid financial plan in place. It's also important to consider the type of property, financing options, and legal and tax implications before making any investment decisions.